Tesla stock has been on an absolute face ripper rally, especially if you are short in this name. I would like to say I feel bad, but after all, you should have seen this coming. Short sellers are down 12 billion in mark-to-market losses in 2023, largely because, again, they probably shouldn't have shorted Tesla in the first place. And there's a big disconnect here. Some people don't know about essentially what's happening in Tesla and they remain short. And then there's other people that fully understand the opportunity and what's going to happen throughout the rest of this year. So what is going to happen throughout the rest of this year? How is Tesla going to react in the next month or so? What's the big catalyst coming up? How high could Tesla stock go? Could we see a short squeeze? All of these questions I think we need to get into here in this video. So let's get into it. But before we do that, we are starting a trading community right here on Tuesday. That's going to be the first day the markets are trading. If you guys want to join that, link down below in the pinned comment of this video. We're going to have a live newswire. We're going to have tools for you guys, different strategies like how to day trade using options with an account less than $25,000. Things that a lot of people don't know about to really help you elevate your trading as well as stay up to date with what's happening in the news. Some of those trades can be some of the best winning trades. And if you're interested in real estate as well, we're going to have how to identify a good property or not, how to find value, how to make value, how to pick a right tenant, all of that. We'll have a little bit for everyone in that group. So and I will also give out my trades in real time as well. Link down below in the pinned comment of this video, but that is neither here or there. Let's get into what's happening with Tesla recently. Now, where do we even start? Because every day we're getting more good news. And furthermore, proving that the shorts were wrong this whole entire time. And they're going to be squeezed in their short positions. I don't think that is a question with all of this good news that we have been seeing and this upcoming catalyst coming on July 2nd. Now, if you asked Elon Musk why Tesla's stock continues to go higher, well, he would say that Tesla's valuation is tied to solving autonomy. He says, quote, "The potential for autonomy is that the value of autonomy is so high that even if you have a discount, a percentage probability of autonomy happening, that is so incredibly valuable." He reiterated the idea of Tesla owners turning their vehicles into a fleet of self-driving robotaxis, an idea that he once said would be implemented by 2020. Obviously, we know Elon works on his own timeline. He says things far before they ever happen, but it looks like robotaxi is a little bit closer now than it was before, and that is a huge reason why this stock is going higher. Not the biggest reason why I'm bullish. I think my take on Tesla is far different than you'll hear from anyone else. I actually think advertising is going to be a massive deal for Tesla by the end of this year. Really, once Tesla starts to see the benefit of advertising and introducing a brand to the mass public, they're going to start doing more of it. They're going to get more sales for Tesla vehicles. They're going to sell more vehicles. They're going to sell more full self-driving, which sells at 100% gross profit margins. And full self-driving is $15,000. That's where the profitability comes from with Tesla, and that's where you could see their margins improve quite dramatically. Robotaxi, whether it happens next year or the year after that, I don't care all too much, but the markets are forward-looking, and that's why the markets are starting to value Tesla with their AI capabilities, in which that was obviously not the case in the beginning of 2023. You've also seen some very impressive delivery numbers out of China for the month of May, which has a lot of people excited for July 2nd when we are going to get the Q2 delivery numbers from Tesla. We're expecting another record quarter, an all-time high second quarter of 440,000 vehicles to be delivered. If Tesla beats on that expectation, then the markets might have a bit of catching up to do in reassessing where Tesla's deliveries could go by the end of this year. Matter of fact, GM and Ford's chief operating officers just said on Friday, if this pace of consumer demand continues throughout the rest of this year, they were completely wrong on their full year guidance. They will have to raise their full year guidance. And Tesla looks to be in the same boat, but on a different ship. And I would beg the question of, is Tesla on a better ship? And I would say so. It's most certainly the stock is. Now, if you asked other people, maybe they would say Tesla's bullish. The stock's been so bullish because they're looking to expand aggressively. Spain, Italy, France, they're all trying to get Tesla to build a new factory there, as well as North Mexico, as well as India, and the South Asian region as well. It looks like that good demand is going to lead to more production. That's ultimately what needs to happen when you get good demand. And it looks like talks to expand and build more gigafactories has been ramping up a lot as of the last couple of weeks. If you asked other people, such as Morgan Stanley would tell you it's because Tesla is about to start their own arm of financing. This is something General Motors did in the year 1919, is create their own financing facility because they started to gain data on consumers and could make good judgment calls. Now, Morgan Stanley says Tesla needs to do this because they can cut out that middleman, that financer, the bank, or other, credit institution, give potential Tesla owners better deals, thus sell more vehicles, and also rake in some nice interest fees as well. So Morgan Stanley says this would be a very positive for Tesla and that you should expect this to come by the end of this year. Or maybe Tesla has been ripping higher recently because Elon has said that they now expect to be able to produce 375,000 Cybertrucks every single year. Previously, we were only expecting 250,000 Cybertrucks in a year. Beautiful thing is, every Cybertruck that is built has already been sold. The Cybertruck has over 1.5 million pre-orders. But even better yet, every time Tesla has introduced a new vehicle model, sales have jumped exponentially year over year. For an example, in 2020, Tesla had 34% volume growth, sales growth, year over year from 2019 to 2020. Only 34%. Tesla unveiled the Model Y at the end of 2020, and 2021's volume numbers were 84%. Because what happens is people go to the Tesla website. If they love or hate the Cybertruck, or if they purchase one themselves, who cares? They go to the website. They end up buying a vehicle. Maybe that's why the stock has been ripping higher. I would say it's probably a combination of all of these things. And I think there is some real tailwinds here that will help propel Tesla even higher. A big one of those has to be the short interest. Shorts are down $12 billion since the start of 2023. To put this into context, in the year 2021, I'm sure you remember that. I'm sure a lot of you guys were in the markets. Short sellers in Tesla lost $10 billion. So less than where we are now, but short covering was a major factor that made Tesla rally 129%. In the year 2020, short sellers were down $40.7 billion, and Tesla stock rallied 743%. It's clear, short sellers get squeezed out of Tesla positions, and that's a reason why Tesla can really rally exponentially, right? This is not a GM, it's not a Toyota, it's not a Ford. There's long-term business models here. Whether you look at full self-driving, you're bullish on robotaxi, you're bullish on the auto business, the car business of Tesla, or solar, or anything else. It does have a big role to play. And short sellers have not started to cover on short positions. Tesla stock has really taken off ever since Elon announced that all Tesla models are available for the $7,500 tax credit. That's another great reason to cover on your short position. Now, from all of the data I have been able to collect, it looks like a vast majority of short positions were taken out when Tesla stock was in between $100 per share and about $150. There was quite a few shorts taken out between $150 and $170 as well, but really at that lower end range, and for no good reason. I wish I could sit here and say that it was justified for Tesla to fall and that things have rebounded and they're so much better now than they were before. But I can't. Nothing has really changed. The fears were overblown. So what's next for these shorts, and what's ultimately next for Tesla stock? Well, to answer this question, what I like to do often, not only with Tesla, because I like to trade other stocks as well, is look at the option activity and how hedge funds and institutions are placing their option bets on stocks that are not doing well, that are going down or about to hit a peak of a rally and fall. You will start to see option orders coming in that are pretty bearish. And you are seeing quite the opposite for Tesla. Take a look at some of these recent orders placed in the last 2 to 3 minutes of the trading day on Friday. $272.50 call placed for next Friday, for June 23rd. That's another $13 of upside from here. A June 30th, so 2 weeks out, a $290 call. A June 23rd, $265 call. If you scroll down, a June 23rd, $270 call. A June 23rd, $280 call. A June 23rd, $285 call. 2 more of those. 3 more of those. Right? You get the idea. Some of these orders are even targeting $500, $600, $700 by mid-year 2024, or even by January of 2024. Some people are betting extremely bullish, but the vast majority of hedge funds and institutions are betting for at least a rally to $300 per share. And I wouldn't blame them with the recent rally that we have seen in Tesla and all of the great news coming out. Big question is, in the short term, are deliveries going to be better than expectations? To buy Tesla right now, to buy options, to expect the stock to continue to rally, you need to beat expectations. Even if it's not by a lot, you have to beat expectations. That's a given fact. If Tesla does not beat 440,000 deliveries on July 2nd for Q2, the stock's going to fall. If it comes in line with what I expect, 460 to 480,000 vehicles, markets are going to have a lot more repricing to do. Because for next year, the markets are only expecting 27% delivery growth. 27%. Elon has stressed in good times and bad times, 50% delivery growth is what we target every year. So why are the markets pricing 27%? Well, maybe it's because the markets are assigning the recession probability at 65%. Over the next 12 months, in which I can't argue with that too much, because historical precedent of things like the yield curve inversion, the 3 and 2 year, 3 month and 2 year yield curve inversions, like we've never avoided a recession. Now, I think a big question is, how does student loan repayments that start at the end of January affect the economy? I think that's a big question that we will have to wait and see how that plays out. But we got a while until that really starts to affect the markets, or at least until the markets start to price that in as a potential negative catalyst. We're not there yet. Markets are not expecting that to be the thing that causes the recession. We'll see. I'm a little more bearish in that regard, but hopefully I'm wrong. So there are some potential negative catalysts coming later down the line over the next 3 to 6 months. But from now until July 2nd, I think we have a clear path to $300 per share, and you likely find some resistance before July 2nd. I think we make it to 300, find some resistance until those delivery numbers come out. If ultimately those delivery numbers are better than expectations, that's where you could start to make an exponential move higher from there. You could start to see 350, potentially new all-time highs with Tesla. And a matter of fact, when I sit here and look at the markets in Apple and Microsoft, Nvidia, or some of these other names that have slower growth rates, less of an potential peak valuation, right? I think Tesla has the potential to be larger than all of those companies. And I think if you're watching this video, you probably agree with that. So why is Tesla trading so much lower than those other names, far off of its all-time high? I think that's something to consider as well when you try to look at things as a whole. Tesla shouldn't be here, right? In relation to some of the other stocks and where they are. So I think that does also give Tesla a little bit more room to rally from here. Now, if we try to just consider what's going to happen with the short sellers, I think you do get that move to 300. But I don't think shorts cover until you're over $300 per share. Until you get those delivery numbers, in which I could be wrong, but I expect Tesla to beat. So that's what I'm going to go off of. And then you make that rally and you gap up from $300, from that $300 resistance level. That's where shorts start to actually cover and panic. At that point, they're going to be down over $15 billion, closer to about $20 billion. And that is where you can make that move to 350 or new all-time highs. Like I previously said, I think it's going to be a bit of news mixed with actual shorts covering. Now, if we look at the overall option activity for Tesla as well, I don't want to leave this out here in this video. You had about 2,800 total orders placed on Tesla within the last week, worth about $2.36 billion with a positive order value of 70%. Other reasons why I think Tesla will trend up to $300 per share before July 2nd is because analysts need to start raising their price targets. Analysts are wrong big time right now. The average price target on Tesla is $201.76 per share. The stock is trading at $261.49 per share. They're off sides here. And if you are an analyst and you have gotten good news coming out back to back almost every single day with a company that you follow, your investors, your bank, your firm starts to say like, dude, what are you doing? Do you not see these positive things affecting the stock? So there's a lot of pressure to raise price targets. That's what you've seen with the Royal Bank of Canada just on Friday, raising their price target to $305, as well as Evercore ISI coming out and raising their price target to $335 per share, as well as KGI Securities, Jennifer Lang, saying Tesla's AI dominance is undervalued and also raising her price target to $335 per share. So I think analysts are going to want to get ahead of potentially good delivery numbers, and those price target increases are going to positively affect Tesla. Now, I will say some sideways trading action from here would be a positive thing. As I noted in some of the last videos, Tesla's RSI hit its peak on June 13th. The stock traded sideways for 2 days, and the RSI came down by a little bit. And now on Friday, you hit a new high in this cycle for Tesla, but the RSI is not at that previous high. This is one of the things that the bears are trying to latch on to, is the fact that the RSI is overextended. And yeah, that's a good point, but there's a lot of reasons to why it's overextended. So if we can trade sideways in this next upcoming week, or maybe the week after that, at some point before July 2nd, that's going to be a good thing. We can even trend to the upside. If you look at something like a Nvidia, Nvidia, this is a perfect example. Nvidia hit its peak on the RSI on May 30th. The stock traded down really sideways until June 7th, about a week, and the RSI came down by a lot. And now the stock has literally been hitting new all-time highs almost every single day. literally every single day, matter of fact. And the RSI is nowhere close to where it was on May 30th. So it can give you a lot more room to see that exponential rally higher if the RSI does normalize and actually come down by quite a bit. So when I put all of these factors together, I consider shorts are down $12 billion, a similar amount, a little bit more than what they were down in 2021. And look what the stock did that time around. Mix that with all of the positive catalyst and really the repricing the markets will have to see after July 2nd. I see a strong case for up to $300 before July 2nd, an even stronger case for $350 or new all-time highs after July 2nd, depending on the degree of the B. If Tesla comes in with over 500,000 deliveries, you're probably going to be at all-time highs pretty quickly, right? It's dependent on some of these catalysts. I understand that. But in the near term, I don't really see too many negative things to affect Tesla. And that is why, really, I'm trading this stock. If you guys want to come trade with me live every time I make a trade, link down below in the description of this video. Never financial advice. Treat it as a tool to improve your trading. There's going to be many tools to do that, real estate, all of that. We went over that in the beginning of this video. But I got to be bullish. That's the bottom line. Long term, extremely bullish, but short term, also extremely bullish, at least until July 2nd, we get more information about deliveries. After that, I might be even more bullish, and that would be crazy to say. So that is going to be all for this video. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy your weekends, and I will see you in the next one.